Hello you guys, your boy Amazing Prosper. So in this video I'll be sharing with you guys how to use proper risk management in trading. I remember when I started trading, I don't like putting stop loss. Not at all. Yeah, I like putting take profit, but I don't like putting stop loss. And this thing deal with me like very seriously because I was thinking, okay, what is the essence of putting stop loss when I can leave it to just ride and hit my take profit? But I always blown my account. Like I blow my account every single time that I try that because I am feeling like okay, I'll get in with the lowest amount of stop on lot size just to allow the market to flow, but nothing, no one can determine how deep the market can go or how high the market can go. So if you don't apply proper risk management in your trading, you are going to lose money. We as a forex traders, we are risk takers. The reason why we are risk takers is because the forex market is a very big market, which is it gives you money, huge money, and takes huge money from you. No matter the amount of money that you come in as a forex market, if you don't know how to apply proper risk management, you are going to lose it. Yeah, so we can determine how much we are going to lose, but we can't determine how much we are going to win. So the probability game, which you hear everybody say, is that if you are if you apply proper risk management and apply risk to reward perfectly, you are going to be making it in the forex market big in a long time. But if you don't know how to apply proper risk management, you are going to be losing in a long time too. So in this video, I'll be sharing with you guys how I use my position size calculator and how I apply proper risk management in every trade I'm going to take. So see you in the chat.
Welcome to the chat. Yeah. So, how to apply proper risk management when you are trading is one of the tools that some successful traders know that unsuccessful traders don't know. So, when you are trading and you don't know how to risk very properly, you don't know how to apply the proper risk management, you don't know how to apply money management when you are trading, you are going to be losing all the time because there is one thing to know about strategy, there is one thing to know when to get in or get out in the market, and there's other thing to apply proper risk management to maximize the opportunity or to protect your account when trading. Because if you don't protect your account, you are going to blow your account. I remember that your account size, the money you have in your account is like the bullet that you have on the forex market. If you this as a case study, like someone that is in army, yeah, like a soldier. If you're a soldier and you are in war front, maybe in any country that has, you are in a war front, yeah. So and they are fighting, and you don't know how to leverage very well or maximize your bullet that you have, and you start shooting anyhow, and you get rid of all your bullets, you lost all your bullets. When the enemy gets to you, they will shoot you. So this is what happens to so many traders. Yeah, so many traders, because they don't know how to handle risk, they don't know how to apply proper risk management, they blow their accounts, before they get to see the perfect entry or see the perfect trade that will give them profit. So in this video, I'll be sharing with you how I apply proper risk management on all my trade. So let's go to here, let's go to a fresh chart. Let me show you guys something very easy things that I do when I'm trading. So remember, proper risk management is you knowing the account size first. So let's take a case study, like sorry, let's use this as a reference point. Like you have $1,000 in your trading account right now, and $1,000 in your trading account right now. Yeah, this is the okay, let's use a number. Let's use it. You have $1,000 in your trading account right now. So what will you do when you are trading with this money? First of all, you have to know that a very successful traders, what they reach, like all the millionaire traders, what they do in a trading, because trading is a game of probability. There is nothing is sure, nothing is certain in trading. Trading is a market of uncertainty, and you have to be very careful when you are trading and know that okay, before you make money from this market, you have to first put money in to know if you are right or wrong. So due to this reason, you have to also apply what we call proper risk management. So you have $1,000 account. A very good trader, what they risk is 1% of this account. So what is 1% of $1,000 account? 1% of $1,000 account. How I do my is very simple. I pull out my calculator and times it times. Okay, let's wait. Let's calculator. I pull out my calculator this way. Yeah. So what I will do is $1,000 for me. This is how I do my divided by 100. So the 1% of $1,000 is $10. Do you understand? So this $10, I will be risking only $10 on the trade. So how do I understand the pips, like the lot size to use? So this is where the next site which I use come forth. The site that I use to calculate my position size is this. It's called the babypips.com. So when you go to babypips.com, or just search position size calculator, this babypips.com will show up. Just click it, it will take you here. So for example, you are trading a GDP USD pair and you have a $1,000 account. What you do, you put your $1,000 over here. This is $1,000, and you say you want to reach only 1% of your account, and then you understand where you are going to put. Okay, sorry, this is 10,000. This is a mistake. 1,000. So you understand, first of all, you also understand how many pips are you going to risk. So this place we decide, this thing we decide if you are going to use 20 pips or 10 pips. This is where you put in the pips that you are risking, because as I said earlier, that you have to risk first. That's the forex market is designed for you to lose first before you start winning. Yeah, that's why when you get in a trade, the first time you get in, you'll be on red. Yeah, your trade will be in red before it starts showing blues. Yeah, because it is designed for you to lose first before you start winning. So there's one thing that we call the floating loss. So the floating loss is the loss that will determine how much you are going to. Sorry, the pool, like once you get in on a trade, that the floating loss is what determines maybe sometimes leverage in the market. So for me, what I do is that I give myself my trades 20 pips stop loss, depending on where the swing lows or swing high where I'm getting in. If I'm getting on a high, if I'm getting in on a bullish trend, if I'm getting on a bullish trend, depending on the swing low. If I'm getting on a bearish trend, depending on the swing high where I'm getting in. So for me, I always put 20 pips stop loss. So this place will determine, like I'm trading GDP USD. So this place will determine 20 pips stop loss. Sorry. So these things that I've put here will determine how many pips, how many lot size that I will use. So let's calculate. Click calculate. So you see, I have that $10,000 that I showed you guys on calculator. So the amount at risk is $10,000. The position size unit is $5,000. So what you have is standard lots 0.05. So what this means is that you're going to use standard lot of 0.05 to get in on a trade, and a mini lot of 0.5. So for we, if you're using a MetaTrader 4, this is the one that you'll be using, 0.05. So what does 0.05 mean? Let's go over to the chart. Let's open GDP USD, because that's what I use for this. So very easy, very easy. Don't I hope you guys are understanding what I'm doing here. So let's get rid of this guy. So very easy. So in this case where you are trading this, okay, so in sorry guys. So in this case where you are trading this, you have remember you have $1,000, and what is at risk is this. Sorry, what is at risk is $10,000 inside this $1,000. So, and this is 1% of your account. Yeah, remember you have to risk 1% of your account. 1%. 1% of your account size on each trade. So you have to risk. So you have $1,000 and you are risking $10. Okay, so I need to put this. I need to put the dollar mark on them. It doesn't really matter that much, but let's make it clean. Hold on. So wait, guys, very easy. So you have to understand that this thing that you have here, you have to understand that this thing that you have here, you have $1,000 on your trading account, and you are risking only 1% of your account. So this 1%, if you know how to use it very properly, you are going to stay in the game. What will matter is staying in the game, not how much you win immediately, but how much you are able to take out, how much you are able to stay in the game. That's what really matters when you are trading. Because if you don't make money when you are trading, you are going to lose money. And yes, we all lose money. There is nobody that is a holy grail. There is no strategy that is a holy grail that you win always. You must have like you must have a loss sometimes. But what we do as a professional forex trader, that what we do is get bigger and our losses get smaller. So our wins must be bigger than our losses when we are trading. That's what will give you an edge. That's what will make you a successful forex trader in the long run. So what you are risking 1% of your account size, which is $10,000. So what you also do is this: you have to have a risk to reward ratio, which is says 1:2. So this is another place that you have to pay attention when you are trading. So 1:2, 1:2 ROR, ROR, risk to reward ratio. 1:2 ROR, risk to reward ratio. This is very important. So many newbies blow their account, or they are making money because they don't know how to apply these things when they are trading. You have to risk small. And when you are risking small, you have to also target twice of what you are risking. So what this means is that you are risking $10 in each trade, and you are targeting 1:2. What this means is that you are going to be putting this like this: $10 equals to $20. $10 equals to $20. So in a case where you are risking $10, you have to be targeting $20 on each trade. If you don't do this, you are going to lose, and if you don't do this, you are going to lose in a long run. Because if you are targeting $10 to make $10, if you lose 5 times, you are going to come up break even. What in a case where you lose 10 times and you win 5 times? You are going to lose money. Do you understand? So remember, this is it right here. And in a case where you enter 10 trades, okay, let's show it a practical way. Let's do it a practical way. Yeah. In a case where you enter, remember, if you win one win, number one win trade, number one, let's do it one W, $20, two W, $20, three W, $20, four W, $20, five W, $20. Then the sixth one, L, $10. The seventh one, L, $10. The eighth one, L, $10. The ninth one, L, $10. The tenth one, L, $10. So very easy things. I want to show you guys something very, very good to apply when you are trading. So this is it. Okay, let's demarcate the ones. Let's demarcate this one. Or should we do it this way if it's possible? It's going to take all of them. I'm supposed to open it in a different place, but it's all right. It's all right. It's all right. It's all right. Let's do it this way. Ehen. So let's do it this way. So remember, you have this is called 50% win ratio. That's what you have. You win 50% and lose 50% of your trade. So let's calculate this thing. You have 20, 20, 20, 20, 20. What does it mean? You have 20 times 5 is $100. So you have $100 in your account. Remember, you come in with $1,000. So this $1,000 come here. This $1,000 is now $1,100. So it is now one. Okay, let's do it this way. It's now equals to your account size now is so your account size now is equals to 1,100, yeah, dollars. $1,100. So right now This is your account balance now because you have a series of winning 50% of the account. Now you have 1,100 dollars. Now you are in profit. So what about in a case where you start losing, you lost all these 5 trade in a straight? What will you fall back on? You will fall back on this. Very easy. You fall back now, your account size will be equals to 1,050 dollars. This is very deep. Do you understand? Now you fall back to this. $1,000, you are risking $10 on each trade. Then you win 5 times, then you have $1,100. Then you lose 5 times, you have $1,050. In a month, you are still in profit of about how many percent? About 5% of your account. Imagine that this account is $1 million. Brothers and sisters, you have made money. Imagine that it's $10,000, brother, you are up 5%. You made money. Imagine that it's $100,000, brother, you are 5%. You made money. 5% of $100 is how much? $100,000 is how much? $5,000. 5% of $10,000 is how much? $500. 5% of $1 million is how much? That's very huge. $50,000, I think so. Right? So you are up. When you are up, you are up. You have made money. So it doesn't matter the amount. What matters is if your risk to reward ratio, you know how to play your game very correct. So let me show you a practical way how to do that with a risk to reward if you don't know how to use it. So remember what we use is 20 pips on our position size calculator, which is here, 20 pips. So on the chart, see what you will do. If you want to get in on this chart, maybe you are trading on this kind of trade and you are here. You are here. You are here. So remember, I always get in on 15 minutes. Yeah, if you know me too well, you know that I use my chart pattern that I trade with is W. So when I see this kind of thing and all my complexes is in place right now, I'm waiting for a W from here and the market has completed a W. I'll put my trade this way. I'll get in this way. I'll use this position tools. Then I'll set 20 pips. Imagine that I got in here. So 20 pips and I'll be risking 1:2 is $40. That's 1:2. 1:2. This is clear. You are risking 20 pips and you're getting 40 pips. Very clear. So if this market is pulling back here, you will stay in the chart because you know how much you are going to lose. You are going to lose $10. And if you win, you are going to win $20. Do you get me? So now the market is pulling back because you know how much you are going to lose because you are applying this risk to reward. You have already used your position size calculator and you know how much you are going to lose. You are going to stay in the chart until the market plays out because we don't know which trade is going to be a winning trade or a losing trade until we get in. Don't be afraid to get in. The only reason why you are afraid to get in is because you don't know how to use your lot size and you don't know how to apply proper risk management on your trades. Forex traders are risk takers. If you don't apply proper risk management in your trades, if you don't know what you are getting in, that's when you will see someone that get in on a trade and he's feeling anxiety, he's feeling hot, he's stressing out about that trade because you don't know what he's risking. Knowing you don't know you not knowing what you are risking in a trade is very risky. That's when you see people lose money, huge money, and they quit forex or they went and commit suicide because they don't apply proper risk management. They don't know that the forex market is a game of probability. So this is how I apply proper risk management on my trades. You have to be risking 1% of your account on each trade that you are trading. 1% of your account. So you have to be risking. This is it. You have to be risking 1% on each trade. 1%, $10, which is this. Where did I put 1%? Okay, which is 1% of your account size on each trade. 1% of your account size on each trade. Very simple. On each trade. 1% of your account size on each trade. That's what you lose. That's what you are going to be risking. So with this thing, you are going to turn out successful in a long run. You're going to turn out successful in a short period of time. because long run, short period of time determine what determines all those times are what you are doing right now will determine if it's going to be a short time or a long run. But in all things, if you apply proper risk management this way that I have shared with you guys, you are going to turn out successful.
So guys, thank you for watching my video. So this is how I apply proper risk management in my trading. So if you don't know how to apply proper risk management in your trading, you are going to be making so much mistake, because Forex doesn't care about your daddy, your mom, or your sister. It doesn't care if you are crying or you are sweating or anything. It's going to wipe out your account if you don't apply proper risk management in your trading. So if you are new here, please consider subscribing and turn your bell notification. Please hit that like button for your boy. See you in the next video. Peace out.